Welcome traders to another Tickmill trading update with me, Patrick Munley. Want to update the SP 500 view using the Emini futures contract and put together a trade plan for the week ahead. Before we jump into the technical setup, let's review where we're up to. So the S&P 500 finished the week up almost 1% with 1% from new all-time highs, with information technology and communication services also making new all-time highs. Two sectors, healthcare and energy, remain in correction territory. Midway through the trading month, the S&P 500 has about 268 points of range, which is slightly higher than July's range. Since we have reclaimed the balance area from that 6-week balance period, we remain above the balance, and the potential for a breakout attempt continues to build. In terms of the market condition, one time framing up on the monthly, higher and trading outside of July's range. In terms of the weekly condition, one time framing higher and trading outside the previous week's range. On the daily time frame, one time framing higher, technically, but you could argue that we're in a 3-day balance period. In terms of the market breadth, stocks trading above their 20-day moving average closed at 52% versus 48% last week, and the stocks trading above their 50-day moving average closed at 59 versus 56% last week. Those trading above their 200-day moving average closed at 60% versus the 56% from the week before. Tuesday and Wednesday of last week saw some pretty decent inflows into the New York Stock Exchange, with Thursday and Friday seeing some profit taking, and we are consolidating as we begin the week. For the most part, not really much change. We are in August. There is lower participation, lower volumes, but the market continues at this stage to have a bullish feel to it. In terms of the data for the week ahead, nothing today. Tuesday we get housing starts. Wednesday FOMC minutes. Now they won't have as much impact as normal because obviously on Friday we have the Jackson Hole Symposium and Fed Chair Powell will be issuing comments there. On Thursday, obviously jobless claims. We have global PMIs and existing home sales. Now over the weekend, obviously we had the Trump Putin summit on Friday, and now we have all the European leaders heading to DC today, along with Zelensky. So that's going to be a pretty interesting dynamic to add into the market narrative at the moment, and we'll see if some type of peace accord can be reached, and that would be expected to have positive momentum to the market. In terms of our gamma profile, currently sits at 546 million long gamma after Friday's options expiration. 6,500 is still the biggest strike on the table at the moment, so that is the magnet. What I've been waiting to see really will be where we close today, to see if that market is still positioning higher in terms of rolling up those call strikes to that 6,500 level. It's hard to get a read directly after the weekends and a monthly options expiration. And so in terms of implied volatility, that continues really to be depressed to the downside. So we slip back into complacency territory, really, in terms of volatility, and we'll see where we close going into the back end of this month. But at the money, volatility at the moment shows a slow build up all week into Powell's speech on Friday. But even if we're talking about a build up to a big, let's say 10.7, 10.8%, the market isn't too worried about Powell's speech at the moment, given the current pricing with respect to volatility. So let's take a look at the technical picture and see where we are in terms of the weekly bull bear zone. I'm going to be using 6410 to 6400. Any pullbacks into this area, we've got this volume shelf. I would be watching for bullish reversal patterns in that area to engage on the long side. In terms of implied volatility pricing for the week, we have 65.60 as potential range resistance, and below that 6400, 6410 area, we have 63.80 as implied volatility. We also have this anchored volume weighted average price coming in just below there, 63.88. So this area, I am going to be looking for support here, and I want to engage there on the long side. Ultimately, then looking for us to trade up through the prior highs here at 65.08. And we'll see if we can get a test of that 65.60. Now, any move into that 65.60 area, certainly from there, I will be taking profit on long positions, and I will actually be looking to trade that counter trend on the short side for a tactical play, looking for a retest of that 6,500 from above. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.